friends, I'm Rocky Outcrop, as you can see, and this is, of course, 100% quality technical analysis. Thank you so much for joining me. Like, subscribe, all that chat. Let's take a look at the Bitcoin USD charts together. And now as well, I'm actually not really that bothered about this ascending, broadening wedge chat that I've had recently, and I've already covered it in all the recent videos. You can go back and look at that if you like. The last two videos, for instance, have got some chat to do with that. And in today's episode, I'm actually just kind of like building up to getting rid of all of these drawings off of here and instead looking at things slightly differently with the moving averages instead. So just like to kind of give us a quick summary of where we find ourselves right now. We're just in challenging this grey fuzzy line and where we have the 236 Fibonacci retracement point in there at 11,413. The current prices are 11,424. We have had lows today so far of 11,350 area and highs up there at that 11,500 area, having never managed to really achieve traction towards either direction quite as yet. If we look over here on the BitMEX chart where I have this pitchfork, then you'll be able to see, of course, that. Do I have two pitchforks on this chart? Let me just check. Is it this one? Yeah, I've got two different pitchfork ideas essentially. In terms of this second one, we're just outside of this zone right now. Obviously, finding that we're right on the edge here in terms of will we find support or resistance, etc. Yada yada yada. And if we do drop back down from that, then of course over the next wee while we could be looking down to that 10,750 area. Just as a sort of quick kind of shout out to that. But this pitchfork here, we found the resistance yet again in that 10,550 area, and we've so far kind of been supported above this median line. We'll wait to see how that kind of pans out over the next wee while. Other things from the land of drawings include that we've had the full measured move off the back of this symmetrical triangle, of course, that we talked about recently. Coming up to our white line here, bang on off of that actually as it happens, and then back down again below this grey line. This is the golden pocket zone. As you can see, the opens and closes were within this area over here, so there's a little summary for you. As you can see in terms of the vpvr and whatever else, that we're just in this little pocket. And in terms of the CME charts, we have this gap over here at 11,195. Is that right? So 11,200, just call it. Of course, there's the other gap down below as well. And is there anything else I wanted to point out while we're here? I've got my VWAP thing. Did I already mention this? That we came in and touched off the VWAPs, my anchored VWAPs from the impulse up the way. They're nothing special. It's just kind of showing us that on average, longs are doing better than shorts in terms of average buys since the 28th of July. Obviously, that's not quite the case. If we were to reposition that up slightly higher, actually, it is the case. On average, if you included buying it all the way down here, then your average basis is that you're doing okay relative to the price. But anyhow, I'll just undo that. No, I'll just move on. What I want to do instead is, you can ignore all that chat. That's kind of besides the point. What I want to do instead is, and I'll just use this chart, sure, why not? Because it makes no difference when I go hide all drawings and I put on my moving averages again. So I'll just put the moving averages back on. I seem to have deleted them. So the ones that I particularly use are Crown Trading moving averages. Of course, they're made by, or somebody made them for, not sure if he coded them out himself, Eric Crown. He's one of the better TAs on YouTube. I would definitely recommend watching him if you haven't already. Of course, he's got in the region of 50,000 subscribers. Who am I to recommend people over? If you do go over there, then maybe you could recommend people to come back and watch this channel, because it's the only two good YouTube channels for technical analysis. What he likes to use is 21, 55, 100, 200 for the exponential moving averages, and then he has it set up here with 100 and 200 on the simple moving averages. I'm going to just adjust this here to what I usually use myself. So that's 144, 233, 50, and 200. And then I'm going to change the style of these things so that they're slightly more visible. Make the moving average one. This is which one's one? One is 50, 2 is 200. Yeah, so I want the 200 to be white and to be a dotted line. Circles. And here, this one to be red. A nice red. This red. And a dotted line. Circles. Okay, so that's more or less what we're normally used to looking at on the channel here in terms of the color scheme and whatnot. I think this one here should probably be a bit of a brighter peachier color for us, I think, is what we kind of tend to look at it like this, I think, instead. Okay, so like now we're back to normal, and let's just do a bit of the old TA using these things. Now, I'm not going to as well focus too much on the 12-hour chart as I started off the show here on the 12-hour chart. Instead of going over to the 24-hour chart, just to take a brief look at things, and you can see that 21 EMA has a nice upward slope on it, which is a good thing. We've had this downward slope leading into a crossover with the 55 EMA back there on the 12th of September. Then they crossed again and again and kind of snaked around each other, finding that actually that they got the sort of found its feet with in terms of the bullish stance with regards to this cross over here on the 8th of October. And since then, they've both had a sort of more or less upward slope on them, and that's good to see. Of course, while this is happening, this is all happening above the other major moving averages, which from a sort of triple EMA perspective, if you like to look at these things, of course, this is like the dual EMA perspective. Obviously, that's kind of technical. Let me just explain this instead for complete noobs. When you're looking at moving averages, what you can do is use several different strategies in terms of your trading. For instance, crosses of two moving averages where you have a shorter period and a longer period. In crypto land here, we like to use shorter period moving averages in general compared to what your average is that people talk about in terms of the normal, the traditional stocks, which now include crazy things like .coms and stuff like that, but all of them. And when you see them crossing and they're positioned above an even slower moving average, if you like, a longer period moving average towards the top side, then of course a positive cross up here when positioned above a slower moving one is another way of looking at these things, to saying, well, I could take longs off the back of that. Whereas crosses of them when they're positioned below the other moving averages, like over here, for instance, of course this being a bad example since the prices did continue to go up the way, would be maybe you wouldn't trade off the back of that cross towards the top side, since we're still below the other major mover averages, right, whatever. and that sort of a thing. Equally, I suppose you might have like discounted this cross towards the downside because we were above the other moving averages. Now, I tend not to look at it in terms of that, in terms of the sort of that construct with the triple moving average type idea. But of course, some people do in the world. Thought I'd point that out since I was reading it in a book recently. I knew it anyway, but I was reading it in a book recently. I thought, well, I should maybe mention that on the channel and talk about why I don't do that. And as you can see, here's a couple of examples about why I don't do that if I'm going to be talking about the crosses that happen with this degree of frequency with regards to 21 and the 55, which are a better trading pair really in terms of crosses than not better, but there's more frequent activity on them, which opens up more choices for actually taking action in the markets than looking for crosses between other moving averages, such as, say, the 21 and the 144 or whatever. Although, as you can see, they did cross over here just before this big dump down the way, and they crossed over here. And well, on average, it worked out for you. But of course, taking a position off the back of this on the 3rd of May meant you had to wait for 3 months really to get into profit with that one. But these sorts of things. So what else are we seeing in terms of moving averages? And just coming back into the price action here, you can see that the 50 simple, this red dotted line here, sloping towards the downside, it's about to looking like it could start to curve around the way. There's of course a couple of considerations to be had here with regards to this price action, which is up higher than where we are right now. Taking a measuring stick and going back the way, you can see that if we go back 50 periods, for instance, there we go, 50 periods, that this section of price action is obviously still included within the moving average here. So we will see this moving average then continue to diminish towards the downside with a downward slope, should we not see price action coming up here and moving up above this zone, or staying at least above where we are just now, which kind of gives us a couple of sort of, it's a more nuanced approach to looking at things, obviously. Not nuanced, that's wrong, more detailed look at the moving averages and what you find on your average YouTube channel, obviously. Looking back here, therefore, we can assume that should prices stay where they are now, that in, what would that be, about 1, 2, 3, 4, 5 days, we'll start to see a more of a downward slope on things, as this price action obviously is included in the average, but this price action, which is higher than we are right now, isn't anymore. But that'll be a fairly short-lived experience, and we can start then looking towards, perhaps moving towards the top side again with this general upward movement of price action, above the 50 50 simple. So what that really boils down to is kind of saying that you want to see the prices stay above the 50 simple moving average in order to maintain that positive stance. And where the 50 simple moving average right now is about that 10,800 area. So of course we know when we look back and put all the drawings on and whatever else, the things that we talked about before, that if we did come down and challenge this area at 10,750, you'd be looking to find support. Obviously, if we're looking at it from the perspective of Fibonacci retracement points and zooming in here and these traffic lights and whatnot that we've got on the go, this red line lines up perfectly with that 750 area. And of course we know in terms of the, do I not have one of those Fibonacci's from down below? Here's one I could just steal and use. So stick that up like that. So of course we know that in this area right here at 10,500 we've got this golden pocket zone that'd be a retest of this symmetrical triangle. If we did move down past this area, I'll just get rid of these lines showing us where the fake out territory was, because that's needless noise on the go here. But you know, that's kind of what we'd be looking at in terms of needing to find support should we see downward price action over the next wee while, you know, with regards to what's going on now. So this is the broader perspective, just a 24-hour time frame. Of course you can conduct similar technical analysis looking here on the weekly, and it's obviously advisory, and looking down towards the weekly, you could look towards the 21 EMA, which we've tested, you know, several times recently and managed to find that we've got support above it. In fact, we've been above it since April, when we crossed up here, and we saw that the cross as well happened between the 21 and the 55 here on the weekly time frame, and that was actually then followed along with another cross up above, or a movement in terms of the price action up above the 50 simple moving average here on the weekly. The 50 simple moving average is kind of like the 1 year moving average on the daily time frame, obviously, when you're looking over here at the weekly in terms of analogs. Now these are periods. If you ever hear somebody saying the 200-day moving average, that's actually the 200 period moving average. It's kind of inaccurate to call it day, because you're putting the period, instead of saying period, you're saying day. And of course then newbie traders will think that on a weekly time frame this is the 50-day moving average on the weekly time. No, it's not. It's the 50 period moving average, which is 50 periods of what? The week that we're looking at. So that's 50 weeks. So there you go, just a little lesson to people. Of course, you know, it does help in a sense that if you say we've just moved above the 200-day moving average, that what that means is that you've just moved above the 200 simple moving average here. Usually if somebody says the 200-day moving average, what they're talking about is the 200 simple moving average here on the daily time frame, which is of course the 200 period moving average. The last time we moved above that, by the way, was over there on the 29th of April, kind of coinciding with what we were looking at in terms of the weekly time frame, and that 50 simple moving average moving up above it, right? Okay, more or less. Now this is just kind of wrapping up here with the 24-hour time frame. Going over towards the CME chart so we can see a couple other things, just to put things into context. So we have that gap that's over there at 11,200. If we did come down and fill that, then of course you're looking to find support above the 50 simple moving average here on the CME charts, which is coming in here. These are obviously slightly different positioned. As you can see, that we didn't actually have a negative cross over here in the CMEs between the 21 and the 55. And I would like to kind of point out the fact that on these charts, these crosses would be kind of considered to be slightly more significant for several reasons. The easiest way of actually kind of just summing that up is that because on these periods here, on this chart here, there's less, there's no weekends. So 21 days is 4 weeks of price action, 4 weeks and a day in terms of the CME charts. 4 weeks and a day in terms of the spot price charts is obviously 29. So if I wanted to change and you know, for instance, this, if you look at how this yellow 21's going along there, and I jump back over to the spot prices and you see it's quite different, then I change this over to have 29 as its input, then this should look slightly more similar to what it looked like on the other chart, because of course that would be, you know, how that would be working, right? So, okay, cool, nice one. Anyway, now there's a few lessons for you in there. I just wanted to have a look at these things. I've not looked at them in a while, and I thought, or in such detail, so I thought I would. Let's just dive down the time frames towards the 4-hour time frame, seeing that we're above the 21 EMA just now, with, you know, as a result of this green candle having moved us up above it, obviously having opened just below it. Opens and closes here in the 4-hour time frame below the 21 EMA would obviously be fairly negative, but, you know, we're in a bull trend with regards to this chart right now. So as you can see clearly, so while we would have potentially some pullback, I'd be looking to a couple of things. Would we take out the lows that we have over here and move on the way or not? Another thing that I was kind of looking at, and of course this doesn't work in terms of this time frame with this being lower when you're drawing in something like a pitchfork and you're looking between swings. If I go back the way afterwards, if I take a pitchfork here from this low up to this high down to this low here, of course that doesn't work because I'm going back the way on the charts. But if I dive up towards the 12-hour time frame and zoom on in a bit, then you can see, okay, the 12-hour doesn't work for it. What about the 24-hour time frame? Well, you can see this includes this wick inside the one area. And if I took it from, say, the low over here, and what type of pitchfork is this currently? That's an inside. Just change over to original or indeed shift or something like that. You could do something like this. That's not worth even mentioning. And I'll not edit out. I don't edit out things from my videos when I put stuff in. I think it's all educational content, no matter what it is, even if it's me kind of fluffing something up like I just did there now. Anyway, looking down here, I'm looking to see if we have closes down below this area. If we do, then of course we're going to look at the interaction between the 236 that we have on the chart just here. This having been drawn in from the lows over there on at 9,830 up to the highs over here at 11,737. And will we get a movement past 11,287? Of course, with regards to the EMA that we have over here between this swing low here and the most recent swing high, we're obviously challenging this area just now. So if you want to look at two different ones, then that would be key. And you can see the interplay between the moving averages at that point. The 55 exponential moving average being key, in a sense, from these lower term time frames if we did see a pullback. But of course, at this point you're entering into a grey area. Down here on the 1 hour time frame, we can see that there's this interaction between the 55 and the 200 and the 21 EMA. We had a crossover here, a positive one back there on the 8th of October, shooting up with the prices ever since. We're right here in the 1 hour time frame with this asking questions about it. So, this could potentially cross. As we see, the prices are kind of struggling to achieve above them. So you can see how this all ties together. Right, cool, nice one. Well, that's going to do then in that case, since you can see all that tying together so nicely. Lovely, great, nice one. Glad to see it. I've been Rocky Outcrop. This has been 100% quality technical analysis. Of course, it's not, 100% noob friendly, but I did make some really big accommodations for noobs here in the video. So regardless of what level you're at with your own trading, you should be able to get some sort of value takeaway from this. And then maybe you'd like to hit subscribe if you haven't done already, of course. And I'll catch you in the next episode. Be sure to share it with your friends if you want to. youtube.com/RockyOutcrop. I'll see you in the next episode. Ta-ta.